This conference will now be recorded.
Okay, we're on our second day of adjusting entries. And remember, we said we're working with this accounting cycle so that we can prepare the financial statements. We started analyzing transaction and making journal entries. We posted the ledger and did a trial balance, and then we moved to the financial statements and closing entries. We come back to adjusting entries because they are journal entries, but different from the journal entries that we did in step 2. You are not told the exact amount. You got to make some calculations. So I always like to get through the whole cycle, then come back to adjusting entries when we can focus on that rather than just quickly talking about adjusting entries and then having to go into preparing the statements and closing the accounts. So I always come back to adjusting entries because of that reason. Are there any questions on anything we went on the last time? So everybody understands everything? Well, I guess we can have an attendance quiz today then. Okay. Important rules for adjusting entries. They are journal entries. They require a debit and a credit. Cash is never in the adjusting entry. It may be in a preceding entry, a secondary entry, but it's never in the adjusting entry. Secondly, an adjusting entry is always going to involve an income statement account and a balance sheet account. It's always going to involve some combination of the two, but never cash. We're going to look at prepaid expenses today, and then we'll go on to some other types of adjusting entries. But we said a typical prepaid expense was supplies. If we bought supplies for $5,000, it's an asset. But once the supplies are utilized, they become an expense. And so if we have 5,000 at the beginning of the period and 2,000 at the end, our adjusting entry is always that difference. So it's not $2,000, it's the difference, 3. And so now instead of showing 5,000 in supplies on the balance sheet, we only show 2,000. The other 3,000 is an expense which will eventually be closed out. Any questions? Okay, so let's see if we can move our problem 3-1. And I think we did 1 and 2 last time, correct?
Right.
How would you put it on like the new adjusted journal entry for the close in the closing? How would you like basically do the second one and the third one once you put them together?
Wait a minute, let me see what you're saying, Charles. It's going to be part of the closing of all of the expense accounts, and it's going to be in closing entry number 2. So it would be in closing entry number 2, but let's not worry about the closing aspect so much. But let's just look at this problem again. And who on team 1 is talking today? Is there anybody on team 1 talking? I guess they don't want need any points then. Okay, J.H.J. Rental Car Company purchased supplies on account costing $25,000.
Well,
Wait, how long? I'm not sure what the rest of my group is at though. What the rest of the group is at.
Well, hopefully that show up at some point in time.
Yeah, if they do, can we
What you want to do?
I mean, I want my points, but I mean, I ain't trying to go by myself though.
Well, you.
Well, can we go first?
Yeah, how about another group go and then I give my group more time to come in.
Group 2. I'm just trying to get it out the way and get time.
Well, we need, since we talked about supplies, we'll do that, and then we'll come back to you, Huntsberry. But let's not be overly enjoyed about getting things out of the way.
I'm not overly enjoying. I'm just saying, I just don't want time to pass and then you're going to have to rush us.
I'm not going to rush you.
Well, I'm just making sure.
And just remember, next week we'll start meeting at 2:30, so we'll have extra time, Huntsberry.
All right. Oh, cool.
You make sure you're here at 2:30.
All right.
Okay. So, Cameron, we have J.H.J. Rental Car purchasing supplies on account for $25,000. So let's just go ahead and record that entry. And since they're on account, we're going to debit supplies. And we're going to credit accounts payable. For $25,000. Nothing major about that entry, correct? And that's a type what?
7.
Who said 7? You slipping over there. Cash wasn't involved, so it can't be a 7. Okay.
Hold on. It's a type 12.
Correct. Type 12. Now, the next thing that happens is that at the end of the year, supplies are $5,000. So if you had $25,000 in your bank account at the beginning of the month and $5,000 at the end of the month.
Wait, can I just like tell you the account number and the accounts and the debits and the credits and the transaction type and you just put it in?
Yeah, I'm doing that.
Okay.
But I'm just saying, if you purchase supplies, if you had $25,000 in your account at the beginning of the month, you didn't put any more money in, and you had $5,000 at the end of the month, how much did you spend?
15.
Tanya,
Yeah, I'm helping.
I'm gonna have to.
Is it 20,000?
Yeah, I think more like 20, Latanya.
I'm looking at the paper from yesterday.
Okay,
What
so
we did.
you always taking the difference. The adjusting entry is never what's on hand. It's the difference between what's on hand and what you had available. So that's $20,000. So in the account 2017, we had $20,000 based on this first adjusted, this entry. They're telling us the balance is 5,000. And so therefore, the adjusting entry had to be a debit to what, Cameron?
A debit of 5,000?
Oh, no, I just said we don't. What account?
Oh, account supplies expense.
Okay. And what we're gonna credit?
You're gonna credit 5,000.
Well, we're gonna credit supplies.
Oh, yeah, my fault. Yeah, supplies.
Okay. So in this problem, we had 20,000 in supplies. We have 5,000 left. So the adjusting entry is always the difference, Cameron. It's always the difference between what we originally had and what we have now. So what's the AGE going to be?
The different
15,000.
15,000.
$15 here. I think this is a what, 13 probably.
Yeah, children chapter 13.
And when we post that entry, okay, we got it in supplies. Then we're going to go to our supplies expense and put it in here as $15,000 for 2017. That's all it is. There is no more to it. You had $20,000 in supplies at the start of the period, 5 at the end. So you no longer have $20,000 in supplies, you have 5. And then, so 1,500 is the adjusted entry. And we put it in supplies expense. So when I give you your attendance quiz, I expect you to make the acquisition journal entry, the adjusting journal entry, and then show how the accounts look.
What's the acquisition? What's that one?
Where yeah.
What you mean?
You said what's what now?
The acquisition in entry. What's that?
I'm not sure where you are.
I don't know. That's what you said. You said you want us to know how to do the acquisition entry. What is that? Like where is that one at?
That's this one, the preceding entry, where you acquired the supplies.
Also, the acquisition is the journal entry. Well, the preceding entry. That's it.
That's it.
Okay, cool.
Dr. Boyd, this is D'Angelo Coulter. When is our attendance quiz?
When it's what?
Our attendance quiz.
Probably Tuesday, unless
Yes,
you wanted to.
no, sir. I can wait till Tuesday.
Okay. Now, typically, these entries are written, the problems are companion problems, so 1 and 2 go together. So we were in 2017, now we go to 2018. So in 2018, JHJ Car purchased supplies paying cash of 15 and purchase on account 20,000. So now we're in 2018. So it's purchasing 15 cash and 20 on account. So we got to record those. So there was 20 on account. So I'll change this to 20. Then there were 15 cash. So we had 2 purchases of supply.
So we wouldn't just add on to what we already had. We would just like make another box for it.
Say that again.
So at the top for the supply, you deleted 25,000. So we wouldn't add on like at the bottom of it or anything. Like we just make another box for it. So basically like for
I just that would have been a prior year. We're in a different year now.
yes, sir.
So I'm just saying we're in a different year.
So
And
what exactly do I do once we're in a different year?
just make another journal entry. And so the others will stay. So I could have left it in, but I just want to concentrate on the second year. That would be on a journal. You know, if you had Excel sheets, that would be on a different Excel sheet. Okay.
Yes, sir.
Okay. So we got to calculate our supplies expense in this situation for the second year. So when we get into 2018, we have that balance that we brought forward of $5,000. We've made purchases of 20,000 and 15,000, so we would post those. So the supplies that we had available during the year totaled $40,000. So this is the next year, 2018. So we had supplies available of 40,000. As we look in the problem, it says that the supplies on hand total $10,000. Okay. So they're saying that our balance at the end of 2018 is $10,000. How much supplies did we use? What's our adjusting journal entry going to be?
$30,000.
How we get 30,000?
40,000 minus the 10. It's 10
Yep.
left over.
So
It
all
was
we did,
40,000.
we look at what we had, we subtract the ending balance. So the adjusting entry is always that difference. So we go up here and we debit supplies expense in the second year for 30,000. Credit supplies for 30,000. So when we got to 2018, 30,000 would be the supplies expense that year. Now this year would have been closed out. So this becomes 2018. Any questions? Can everybody handle that on Tuesday?
Professor, can you go back up? I'm like trying to write and like look at the same time.
Okay, so let's. So here we have the journal.
So that difference that we got from the 2018, so we did the 20,000 plus 15,000 plus the 5,000, that's 40,000. They subtract the 40,000 from the balance, that which is gonna give us the AJE. Then that's what we put it under, the supplies and the supplies expense.
Correct. So we
Okay.
get an account, just like with your bank account. If you have 5,000 in the bank on December 31st, and you add 20 and 15, you now have 40. And then if you check it at the end of the year is 10, then you must have spent 30,000. That's all we're saying. Any questions? Any comments?
For the attendance quiz, do we have to fill out everything? Like, do you want the account numbers and the transaction, well, the T accounts and like everything? You want the transaction
Yeah,
type?
everything.
Okay.
So that you can practice on everything, I assume you got your paper. Do 3 and 4. So take out some paper and work 3 and 4. 16-1's not leading us. So work 3 and 4. Now let's just work 3. Do we have 3 worked?
Hold on. Let us set it up first. Hold on. Give us a second.
Go ahead. So everybody got the facts right for number 3. So only 2 numbers. So we're starting over now. We don't have the rental car company. We have the shoe company now. So if you had those, so we got to go ahead and close all our numbers out. So we're starting a new problem. Okay, so for J Shoe Company, once again, we're starting a new problem. So what y'all gonna tell me?
So for
If we're buying for cash or on account,
on account is $15,000 supplies.
so I'll have debit supplies 15,000, credit accounts payable 15,000. So when we put the we post the transaction 15,000. What's the ending balance?
5,000.
5,000. So what's our adjusting entry going to be?
10,000.
10,000.
10,000. And that wasn't so bad, was it?
Shoot, you wasn't trying to give me a chance to write out my stuff, you know?
And then we will put 10,000 as expense for 2017.
Can you go back up so I can copy it?
Okay, where you want to go to?
AJE.
Okay.
Yeah, right there. Thank you.
And can you go up just a little bit so I can see how the journal, the entry is actually like put in? Thank you.
You're welcome. So we record the preceding entry, the purchase of the supplies. Once they tell us how much is left in the account, we know we got to take the difference between what we had and what's left to come up with the amount in the adjusting entry. So we originally had 15,000 in supplies. We now only have 5. The other 10 have been used up and are going to be in supplies expense. So 5,000 stays in supplies, balance sheet account. 10,000 goes to supplies expense.
What the heck?
Any question? All right, so let's see if the A students can go ahead and work number 4, which is a continuation of number 3. So how much is our adjusting entry in this case?
11,000.
Okay, 11,000 is on the table. So assuming that's right, I'll put 11 in here.
I'm sorry, what was
So
the question?
I just asked how much was adjusting entry, and somebody said 11,000. So we had a cash purchase of 5,000, correct?
Correct.
And we had our purchase on account of 10,000, correct?
Yes.
All right, so when we go into the account, when we get to 2018, that 5,000 is going to come down into 2018 from the prior year. And then we're going to
Is it
put,
AJE 16,000?
say what?
Is it AJE 16,000?
Well, we'll see. We got 11 on there. We'll see.
Okay.
So 5,000 was the cash purchase. So we got to post that. Then we had the purchase on account, 10,000. So we have total available down here, how much? 20,000?
20,000.
And in the account now is what? At the end of this period is what, 4,000?
4,000.
4,000?
Yes, sir.
So what's the AGE gonna be?
16.
How much?
Oh wait. Yeah, 16.
Yeah, that sounds okay. 16,000. I didn't hear that number before from anybody, did I?
I was about to say I did say that. You didn't give me a chance. I gotta work out my stuff. I go kind of slow, okay?
Well, so other people have given me numbers, so I was just saying I didn't. And so in 2019, you'd have 16,000 here. Any questions? Okay.
Did you put that is the 16,000 gonna go under the supplies expense debit?
Supplies expense. Did I put it in the wrong place?
No, I don't know. I can't really see like what it's under.
It
Like
should be on the supplies expense for 20. Oh, we had this pretty big.
Where did 4,000 come from?
In the problem, they told us that you have 4,000 on hand. Okay.
Okay, I got it.
So they told us we have 4,000. So the problem, I always tell you what's on hand. So you figure out when it tells you what's on hand, you go and put it right here. That's what's on hand at the end of the period. So once they tell you that, you put that right there, and you know that this number has to be a number that when subtracted from whatever is above this will yield this. Any questions? Okay. Huntsberry, do you own a car?
Yeah.
Okay. So let's go on to number 7, Huntsberry.
Number 7.
Yeah.
Oh.
We got to know all of it. You're excited to get started. So let's start on number 7. Give team one this.
Okay, let me see. 12. So you do prepaid insurance for 12?
That's correct. So here we have
Hold on, let me just scratch this
purchase
paper.
of an insurance policy for $1,200 for 1 year. So on April 1st, we purchased an insurance policy for $1,200 for 1 year. So we'll need to change this to prepaid insurance. And right now we're at April 1, 2017.
Mm-hmm.
100. Yes, it's type A here. So that is the pictures. Of course, we don't have this.
Oh crap.
So the insurance begins to expire, just like on your own car. The insurance is going to expire. So now we will have an insurance expense. And we're going to credit prepaid insurance because when we buy it, it's a full asset. But as the months go by, the insurance is used up. So how much of that 1,200 is gone by December 31st, Huntsbury?
Hold on. April, May, June, July, August. 9. Hold on 1 second. $900.
Say what?
$900.
Yeah, 9 months gone.
So it's $900, right?
Yeah, $900. That's correct. $100 a month.
Okay. What's it called?
So April 1st, got to count April to December is 9 months. So by December 31st, that insurance is
Okay,
now.
I got a question. Why are we counting the month? Like, cause we paid the first month, so we have to count that month. Cause you know how like when you count, you don't count the first thing, you know?
Suppose you're paying rent. You pay rent now.
Yeah.
You move somewhere on April 1st. The landlord
Okay.
gonna count April 1st. They're gonna give you a month free.
No, they're gonna count April 1st.
Okay.
It just throw me off because you actually got to count the month when I'm not, used to counting it.
Say that again.
I said it just kind of threw me off because you actually got to count the month. You know how like you don't count the first thing but you got to count it.
You just told me when you pay your rent.
No. Yeah.
Same thing. Well, you say you got a car. You got insurance on your car?
Yeah.
Do they give you the first month free?
I wish.
All right. And so why are you trying to change this problem?
No, I'm just saying, I'm just saying because it's math, like you don't count, you know what I'm saying? Like if you about to count to 10, you're not gonna count the 1. You don't, I don't know. You know what I'm
You don't
saying.
count the 0, but you count the 1. Okay.
I'm just saying when you're like taking away, okay, it doesn't even matter, but I'm just saying it's just kind of thing because you gotta count it first.
Okay. So we said 900 was gone, Huntsbury.
Yeah. Prepaid
So
insurance.
that leaves what?
300.
300.
Wait, where did it go? Unless I'm trying to write it down on the paper.
Okay. Then we'd have this will be insurance expense now.
Prepaid.
So any questions as we go back up?
Can you go back to, hold on, scroll back down?
Let's start. We're gonna go all the way back down. We
Okay.
bought insurance for $1,200.
Mm-hmm.
9 months went by. We bought it on April 1st. 9 months went by. So it's no longer 1,200 prepaid. It's 300 prepaid. So the difference, 900, is an expense in 2017. So this is 2017.
What is 2017?
So 1,200 originally in the account, 900 went. So the balance is now 300,000 going into 2018.
Can you stop right here, right there, so I can write this down? You ain't stopped. You gotta scroll up. You see, right here. Let me see. You stopped on the blank.
That's okay.
Perfect. All right, I'm done.
Okay. Well, Huntsberry, let's go back to our problem. And these are all companions. So when 2018 rolls around,
Yeah.
the coverage goes up to $1,500. So to renew on April 1st, 2018, you don't pay $1,200, you pay $1,500.
Okay. So we go back to the journal part and we just make another entry, right? For the 15 that
Right.
we about to be paying.
2018, we
Okay.
will be debiting prepaid insurance.
Mm-hmm.
And we would credit, this is probably cash.
Wait, it's not payable no more?
It should be cash.
Okay, I'm about to say because I did this for
That's not
mine
important.
and it was cash, so I thought I was wrong on my problem that I did for our group.
I'm not concerned about that. I'm concerned about this AJE being correct.
Okay, cool. Oh, it was 15.
Now,
Right.
Hunter, what's the adjusting entry going to be in 2018? So this was
Okay.
2017 adjusting entry.
So hold on one second. Do we do like the same, like the months from April to December, or no? Because I didn't see the months that I have to count.
So how much you going to pay in 2018 for insurance?
You're gonna pay 15, but you're gonna pay $125 a month.
So we need to make the same entry again: debit, insurance, expense, and credit prepaid.
Mm-hmm.
Okay, let's go to our account now. So we said we came into the year with a balance of 300 in 2018.
Yeah.
Okay. And then when April came around, we had to pay what, 1,500, right?
Yeah.
Okay, so
Okay, that's okay. I think I get it. So we're gonna add that up, or not just yet?
what kind of for January, February, and March? For January, February, and March, we still paying 100, right?
Yeah. So it's gonna.
100.
But you said 3 months though. Oh, so we actually gotta do it one by one. I can't just put the 3 and just knock them both out.
Well, we got to make sure everybody can understand the Huntsberry.
Oh, okay.
So
Okay.
if you were paying on a cell phone at the rate of $1,200 a month for a year, and you started in April 1st, 2017, you would still pay that 100 for February, January, February, and March. But then
Yeah.
what's happening in April?
You're gonna be done.
So you
Well,
won't,
never mind. Yeah.
are you gonna be done?
You're gonna be done with 20 the year before, but then you got the 15. So I mean, you back paying more money.
How much more?
15. No, 125 a month.
So you gotta pay $125 a month now.
Yeah.
So,
Oh, okay.
so now you gotta pay $125 times 9 once April 1st rolls around. So what's 125 times 9?
Times 9. That's 1125.
Okay, that's 1125.
And why are we paying for 9 up front like this? Because you gotta, like, why are we paying it right now?
Well, you know, most times on car insurance, they want the money ahead of time. They don't want it after the fact.
Okay.
Right. Do you pay your insurance after the fact or before?
After?
So you pay your insurance, your car insurance after.
I mean, before. Sorry, before.
Yeah, okay.
Yeah, but
So
like,
that's the way insurance companies work. They want their money up front. Okay, they want their money up front. So you pay 100 for 3 months, then you start paying
yeah.
125 a month. So when we add these together, what's our total expense going to be?
Hold on. 125. Oh, what's that? 1425.
Well,
1425.
1425. So the adjusting entry in 2018 is going to be 1425. You got to do a little bit more work when you get to that second year.
Yeah. Okay. So I'm just back stuck on it to 9. So we gonna always pay like in advance
Yeah.
from like. Can you go back to the word problem so I can put the connection with the whole 9-1 thing?
Okay. So
Yeah.
you started on April 1st. You don't start it on December.
Yeah. Okay. See, that's I'm saying. So we just paying for April to December again with the 9.
No, but you might want to pay January, February, and March also.
No, that's what I'm saying. But that's for 20. That's for the year. But when never mind.
Let's look at it this way. Suppose you rented an apartment on April 1st. Your lease was $1,200, $100 a month.
Mm-hmm.
Then when April 1st of 2018 came around, it jumped to $1,500. How much money you gonna have to pay in 2018?
We're just talking about the first month. That's what I'm saying. Like
No, every month, all 12 months.
125.
On April 1st, 2017, you started a lease and you were paying $100 a month. So you paid $900. When you got 2018, you could pay $100 a month again for January, February, and March. But in April, it jumped to $1,500. So you now got to start paying $125.
Uh-huh.
So you're gonna pay $100 for 3 months, $125 for 9 months.
See, that's what I get. The 3 months part. I understand that because you got to pay it off.
Yeah, you got to pay it all.
Yeah, it's just how as soon as you go to April 1st, it's like boom, you got to pay 9 months. Like that's weird.
Your rent goes up on April 1st.
I understand it, but why are we not just paying the 125? Why are we paying 1425?
It's $125 a month.
9, 10, 11, 12. Never mind. I got it.
So it's 125 a month.
Yeah.
All right, Husband, let's go to yours now. Let's do number 13. So what's involved in 13, Husband?
Number 13.
That's
Well,
in
never
your,
mind.
that's your actual one. 13 and 14.
Okay. So auto is gonna be $20,000.
You bought five of them, Huntsville.
13.
What?
Wait, I read that wrong. Oh, never mind.
It's 100,000, right?
That's correct. So
Okay. Well, all mine were wrong. I did not see that 5.
so now we got to change these to auto.
Wait, let me finish this real fast.
You all's favorite entry, debit auto for 100,000.
Okay, and then you put 5 with cash. 5,000. That's nice.
Cash 50,000. And what else?
Is that a problem? You said 13, right?
Yeah, I think I said it.
Okay, what was I looking at?
So you buy 5 autos
Mhm.
at 20,000 each. So your total cost is 100. You pay 50,000 down.
Yeah. Yeah, 50,000 no payable.
Now, Husband, let's look at our adjusting entry.
Okay. Auto is gonna be the $100,000. That's the first one.
For T account. So we go to auto.
Mhm. Oh, gee, I missed this auto.
We got 100,000 in the auto account.
Mhm.
This out. This out. And now we got this new account of appreciation that we're going to utilize because we don't want to change the cost. We want to keep it at 100,000. We got a long-lived asset,
Yeah.
so I always want to know what it costs. But when you drive a car at the parking lot, what happens?
Depreciate.
Depreciation value. So we
Yeah.
said this car was going to last how many years?
Hold on one second. Let me look at the problem again because I clearly was looking at my numbers wrong. It's gonna depreciate after over a 4-year life.
So
So
4 years.
so 100. Let me divide that. Divided by 4. So it every year is gonna depreciate 25,000.
Okay, that's correct. So we're going to make an entry.
Mhm. In depreciated expense, we're gonna put the 25 there. The 25,000.
Depreciation expense, that's correct.
Okay.
And what are we going to credit?
And we're going to credit accumulated depreciation auto.
What kind of account is accumulated depreciation?
The number?
What kind? Yeah, what number? What type of an account is it?
expense,
As a credit.
and it's gonna be.
Well, what is it? Look at that. Look at,
Is it debit?
okay, here's the expense part, but I'm talking about accumulated depreciation.
That's a credit.
Look at your chart of accounts. Where is it located?
Oh, hold on.
Costs and expenses.
The depreciation expense is there, but what about this account accumulated depreciation?
Accumulated depreciation.
Where is it
211 credit.
located?
I don't know what's wrong.
Where is it located on your
Oh,
chart?
it's
Under
Long-term
assets.
assets.
a long-term asset.
It's a long-term
A
asset.
long-term asset.
And what's this normal balance?
A credit?
It's a credit. So if I'm
Oh,
giving you accounts now, you know that accumulated depreciation is going to have a credit balance.
yeah. Oh, the same.
And let's look at our balance sheet presentation in 2017. So when we do the balance sheet, we're going to have auto at 100,000.
Wait, what are you doing? What is this called?
The balance sheet.
The balance sheet. Oh, Lord Jesus. And you expect us to do all this on Tuesday?
Less the accumulated depreciation, 25,000. So if you were to do a balance sheet,
Mm-hmm. Hold on.
the net cost for the auto would be 75,000. So we're just saying that the auto originally cost 100,000. You've taken depreciation of 25,000, so now the net cost of what it's worth is 75,000. That's how it would appear on the balance sheet.
Oh, okay.
Any question? Let's go on to year 2 in this problem. It says, so we're going to 14. It says, assume JHJ Rum Car Company owned the cars in exercise 13 on December 31st, 2018. Prepare the adjusting entry and the balance sheet preparation. So what you're going to do here, Huntsberry?
Run a car company. Car.
What you going to do?
I'm not 100% sure. That's why I got confused then. Like, so do we have to like make it? Let me how to put it. Never mind. I'm honestly confused. I don't know what's the next step in this.
So we got to make some journal entries. Are we going to make this journal entry?
We basically just
Wouldn't
take
it
off
be
note
equipment?
payable because we're only owning it.
So what? Who's talking? Well, Huntsberry, you said you own a car, right?
Yeah.
Do you buy it every year, or you just?
What you mean?
Do you go and make? Do you go and pay cash and put a note on it every year?
Yeah, I pay a car note.
You pay your note, but you don't go back and buy the car again, do you?
Yeah. So okay. Yeah. No, I don't do that. So
So
we just gotta pay out the
you pay the note. So we wouldn't make this entry. So the only thing you got to do for your depreciation, copy. The same thing.
Oh,
So at 2018, the AJE is the same thing.
oh, okay, and boom, that just equal the 50 that we owe.
Yeah, that's all it is.
Oh,
So
mhm.
see, we get in here that we. So accumulated depreciation in 2017 was 25,000.
Mhm.
In 2018, it's going to be another 25,000.
Wait, 2017, 25?
So the balance now in the account for accumulated depreciation at the end of 2018 is going to be 50,000. That is, you're going to add those years together.
Okay.
And so when we get ready to do the balance sheet presentation in 2018, see if we can copy this.
Ooh, baby.
We have those numbers, but the accumulated depreciation is not going to be 25,000. It's now
Hold
going
on
to
a
be
second.
50,000, and the
Hold
net
on.
cost is now going to be 50,000. So that car goes down each year in value as it does. So that depreciation started out at 100. At the end of the first year, it was valued at 75. At the end of the second year, it's valued at 50. And we keep doing that.
It's gonna be 50.
The net cost, net
Okay.
value, net depreciation. So that's how we've talked about 3 types of prepaid expenses. We had the supply, which we expense based on usage. Then we had prepaid insurance. We base the usage on time. And for the depreciation, the same thing. We basing it on time. Okay. So the prepaid expenses, the assets are overstated, the expenses are understated. You're going to debit an expense account and credit assets are contra assets like accumulated depreciation. And there's
Okay.
preceding entry prior to making this. There's always a preceding entry.
Is this posted? That chart?
That's posted in the primer.
Yes, sir.
What page is it?
I guess it's look. It's in the
What page is
78.
that chart on?
I think all of this starts at page 70.
It
So
says
we
83.
looked at prepaid expenses and looked at examples of each. You know, this is the most extensive one and the one we deal with the most. Now let's look at some of the others. Unearned revenue. A lot of times a company will get its money before it delivers the good. So GameStop's a good example. People want the game, it's going to be a limited amount, they pay in advance. So the company debits cash and it credits unearned revenue. What type of account is unearned revenue?
What type of what?
Account is unearned income.
Unearned income. That's a liability.
That's right, because when GameStop gets your money, they hadn't earned the revenue until they deliver the item. So airline, magazines, companies, they will get your money and be very happy with it, and they debit cash and unearned revenue, and then they attempt to perform the services, and then the income is earned. But until they do the work, they owe you the money back, so it's a liability. So assume GameStop collects 50 in advance from 200 customers for a game that will arrive in 2 months. 2 months later, the game arrive and are picked up by customers. So 200 customers, $50 each, we debit cash and credit earned revenue, a type 4 transaction. When the customers, and this is a liability, when the customers pick up the game, then we transfer unearned revenue to sale. But that transfer is not made until then. Burlington Coat Factory does a lot of this. They get your money and let you give them the money. They got the asset on layaway. When you finish paying, they give you the asset, then they move it from unearned to earned. So when we get the cash, the preceding entry, we have 10 here. When the money is earned, the AJE clears it out and puts it in revenue. So initially the cash is in the liability account. Once the services are performed, we close out the liability account and put it in revenue. That's not a hard one, okay? Not a lot of thought. You get the cash, you make this entry. When you deliver the goods, you make this entry. So do not make this a hard AJE. It's not. Just got 2 entries, not a lot. And you got to be told information on collections. If 90% of the people came in and collected, because everybody doesn't collect, then they debit earned revenue for 9,000 and credit sales for 9. Okay, let's move on to accrued revenue. Accrued revenue is very similar to a type 15 and a type 3, where we perform the services, we've done the work, but we have not been paid. So before we make this entry, assets are understated and revenue is understated. Therefore, we accrue the revenue, which is similar to an account receivable, could be an interest receivable, but it's the same thing. It's just like an account receivable. A lot of time it just happens to, pass the time, such as interest. Now note this, a subsequent entry occurs when the cash is collected. So we're gonna make the AJE first, and then when we get the cash, we're gonna make a subsequent entry. Assume a landscaper performs services weekly for a customer at a fee of $375 weekly and bills the customer monthly. At the end of the year, an AJE was made to accrue the revenue. And, so at the end of the month, at the end of the year, the landscaper, if he's on accrual basis, he's got a debit account receivable and credit sales for the month of December because he's done the work. So his workers have come out, they've done the work, and he's waiting for his money. When his money comes in January, he debits cash, credit account receivable, the old 3. And your T accounts look like this, where
Why is it sales instead of cash?
okay, the workers for the landscaper come and do the work.
Yeah.
I'm the owner. I don't let my workers collect. I send a bill to the customer and collect that way.
Okay.
Got it?
Yeah. So I'm gonna get on cash.
So how did we get 1,500?
the landscaper was doing $375 a week. He did 4 weeks in December. He has to make this entry debit receivables and crediting sales. Then in January, when he gets his money, he debit cash and credit account receivable, a 15 and a 3. Okay, a 15 and a 3. You've seen this many times before, so don't make it hard. So the essence of it, the work is done. We debit account receivable and credit sales. When we collect the cash, we debit cash and credit account receivable. So don't make this hard. Most people get the sequence right. So this is another one that's not as bad. Let's move on to accrued expenses. Ms. Williams. And so another thing that can occur is expenses are incurred but not paid. So that is, we may incur some expenses at the end of 2019. We paying them in 2020, but we have to show those expenses in the accounting records in 2019. So typically we have accrued interest and especially a lot of accrued salaries and wages, because very few people are paid on December 31st. They typically are paid later. Let's look at the first one involving interest. Assume a company creates a note for $20,000 on May 1st. The annual rate of interest is 12%, producing an interest of $2,400 annually. 20,000 times 12% are $200 a month. So we earn interest, or we owe interest at the rate of $200 a month. Interest is paid on May 1st and on November 1st. On November 1st, for 6 months interest, we debit interest expense and credit cash. So we pay the interest expense for that 6-month period. But that's as of November 1st. So for the months November and December, we owe the interest. We don't have to pay it, but we have to pick it up as if we owe it. So we debit interest expense and credit accrued interest payable. Okay. Then when we get that payment again for $1,200, the accrued interest from the prior year, we debit that account now, so we pay it. The interest expense in this year is $800, so the total cash that we get is we have to pay is $1,200, but $400 of this related to the prior year. So we're paying after the fact, after we made an adjusting entry. Let's look at a wage one, which is probably easier to realize. Accrued wages payable occur when employees work in a period, but they're not paid until the next period. Assume the weekly payroll for J. Sharon Car Company is $2,500 a week, which is $500 a day. So the daily payroll is $500. The payroll is paid weekly on Friday. Okay, so if we look at this calendar, we pay on Friday, we pay in December 6th, December 13th, December 20th, and December 27th. But the workers work Monday and Tuesday, the 30th and 31st also. We got to get that into the December year. So let's look at how we do it. On the regular, that last Friday, full Friday in the year, we debit salary, expense, and credit cash. But then for those 2 days, Monday and Tuesday, since we're paying at the rate of $500 a month, we debit salary expense because we want this money into 2019 also, and we credit wages payable. So by making this entry, we get the expense in the year that it relates to the revenue that it earned. So on December 31st, accrued wages has a credit balance of 1,000. And the salary expense for that particular period is 2,500. When the payroll is first paid in Friday, they still are going to pay 2,500. But 1,000 of it relates to 2019 because of those 2 days that went 2019. The other 1,500 relates to the new year. So we had these 2 days that we didn't get paid for. It says 2017 here. And so we have to accrue it in 2017, but we don't pay these people until 2018. And when we pay them that first full salary for the week, we're going to debit wages payable for what was accrued. Those were accrued, so we just debit wages payable. Excuse me, debit salary expense and credit wages payable. So where are we? Let's look at our summary of adjusting entries, and there are 4 types. Prepaid expenses. Assets are overstated, expenses understated. You're going to debit an expense and credit assets or contra accounts. It was a long-term asset. You have a preceding entry where you bought the item. Earning revenue. Before we record the entry, liabilities are overstated and revenues are understated. And so we're going to debit the liability and credit revenues. There was a preceding entry where we got cash. But once we do the work, we deliver the gains, we move it from the liability to revenue to show that it's been earned. Then we have accrued revenue, where the assets are understated and revenues are understated because we've got income where we've done the work but we haven't been paid. And so we're going to debit assets and credit revenues. Then there'll be a subsequent entry where that accrued revenue is paid. So a type 15, when the revenue has been earned at the end of the year, then a type 3 when it's collected the next year. Then we have accrued expenses. Expenses are understated, liabilities are understated. So we're going to debit expenses and credit liabilities, and then there's going to be a subsequent entry. So notice that when we have prepaid expenses and unearned revenue, preceding entry. When it's accrued items, revenue and expenses, it is a subsequent entry. So any questions by anyone? Any questions?
No, sir.
Okay. No questions?
So the problems that we did, we just not gonna go over that. I mean, we have no time, but like I understand, all the stuff that you did. I'm just saying, like, for our problems, we just don't have time. Like, we won't do it ever. Like,
We'll have time next time. I need, but we went over.
yeah.
We'll come back to it.
Okay, yeah, that's cool.
But see, on these, they're just going to repeat on where you bought the cars. Okay. So once we've done one, we've done them all. Got it?
Yeah, but theirs is not. It's kind of not like ours because it seemed like we had more steps to it.
Which ones did you have, Huntsberry?
Oh, 11 through 20.
Okay.
We didn't do
So
that.
11 starts off with the prepaid insurance. I just did another one, but you did prepaid insurance.
Yeah, no, 11. I know how to do the first one, and I think 12 too. It's just when I think it was like 12 is where I started to get confused because I thought I had to close it out, but I seen you close it on the first one. It's just I don't know. I was just getting confused because with like the renewal part.
Well, don't you have a car now?
That has nothing to do with this problem.
Yeah, and don't you have insurance on your car?
Yes, I do.
And do you renew your insurance? And so if you renew the insurance,
Hold on.
a business car, then this is what it would look like. So what we would do, since we well spent the day, we would pick up on these at the start of next time.
Yeah, because it just kept like backtracking, like, and make sure to count January. You know, like that's what it kept saying. Like first it would be like do December, and then at the end of it all, it said make sure to show the entry for January. We're at the end of it.
I think it says show the entry for December 31st, right?
Yeah, but it said make sure to include the balance for January.
Oh, we're just saying here, remember that, that's just saying that, remember we had the problem where we had the 300 that was left over?
Yeah.
That's all we're saying. If you got money in there, you got to pick that up. So if you had money left over from 2017, remember we add the 300, then the 125, that's what that's talking about.
See, that's what I didn't do then. Okay, but for mine, the balance for January was 400. So I put March and then I put 400 to knock them off. Was that wrong?
Which one is it?
It's
11?
it's 12. It's 12
Okay.
because it still had the cash left
Okay,
over.
but
So I
realize
just
that 11 and 12 go together.
yeah, I know. Well, both of them then.
Okay. So let's look at it. So we'll look at it quickly. We'll come back to it. You purchased a 12-month insurance policy for $2,400 on September 1.
Yes.
So how many months are going to expire in September in 2017?
That's just 4.
That's right.
September, October, November. But then it said record the entry of purchase on April 1st. So I put it for April 1st.
Well, you bought it on April 1st, so you got to make the journal entry when you bought it.
Yeah, April 1st. That's what I did for $2,400.
Then what did you do on December 31st?
December 31st. The balance was $600. Or that's wrong.
You're saying that on December 31st, 4 months had expired.
Yes.
So it's at the rate of $200 a month, remember? So your adjusting entry would be $800.
Wait. So I don't count April to December? I count September to December?
Yeah. got to look at the month. So this is the September one here. It can be June.
What the
It can
heck?
be- so it doesn't stay the same. It can be any of those months.
I know,
So
but I put the adjusting to 18, and then I put the balance to $600 because I thought we was going from April 1st to December 31st. So that it was the 9 months, so 1,800.
Notice your July and this one, September and this one. So it could be any of those times. You have to
July.
be this.
I didn't even do 10.
I'm just saying, when you work a problem, it can be April, February, March. It can be July. It can be any month.
Yeah.
So your month was September.
Oh. See, that's what I did at first.
Professor, so for group 4, because I know we have like the percentages and stuff on ours, should we go off of the example that you had just went over to do it, or should we still hold off on it?
Go with the example I gave you. You don't need to hold on. So you got the
Yeah, because
example.
we was confused when we had looked at it, because I looked at the example on Primer to see if it can give us like a slight understanding on how to do it, but I was still kind of lost. So just go off the example that we just went over.
Example.
Say it again.
Yes, go off of that example.
Okay.
We're going through, and like I say, because you have to make calculations, adjusting entries tend to give problems because you can't look at it. You can't look at it and say this is the number. You got to calculate the number. So I realized that, and that's why I pulled this out. A lot of times, with closing entries and financial statements and everything. So I say, well, let me pull it out by itself. Then we'll move it back in afterwards.
So that's all for today.
That's all for the day, Huntsberry. I think we've gone well enough. Just remember, we'll start at 2:30 on Tuesday.
I
And
will remember. And I'm going to redo
Wait,
my problems. Well, I'm going to try to redo the problems
then we
that I
have
did.
office hours on Monday, remember?
Oh, well then, yeah, I'm going to come today
So the
instead.
office hours are at 1:30, and they're at the 01 on the 01 virtual room number. So on Monday, we use the 01 number, then on Wednesday, I use the 02 number. So if you're having issues or anything, then you need to be in the office hours.
Okay, well, I'll see you Monday.
So, we don't learn it all at once. So, I didn't expect that. And that's like I said, pull it out separately. And you just shouldn't be able to do on an attendance quiz supplies.
wait, Mr. Boyd.
Yes.
My class before this class ends right at 2:30, so I might be a little like a little late. Is
How,
that
how late?
probably 'cause I come back to my dorm, so probably it takes me like 10 minutes to get back to my dorm, so I'll probably be in around 2:40 the usual time.
The usual time.
Yes, sir.
You better get you a skateboard or something. We'll work with that. We'll start, and then then I'll repeat it once you get on, and then we'll have the office hours and things too. But
Okay.
we're tightening up now because we're moving toward the end, and so the items that we're looking at, sometimes they're like this. So as we finish up the course, and so you got to make some calculations. It's not that you just look at stuff and that's it.
So for tutoring, we use that the number ending with 01.
Well, the 01 section number on Monday.
So it'll be that 3.
So
Yes, sir. I'm looking at it right now.
Okay, that top number.
Yes, sir.
Now, is anybody gonna show up?
I am.
I'm gonna show up this time.
Okay, all
I'll
right.
show up.
All right, well, let's show so we can work on it. We work on it on separate tabs and everything, but we're gonna have to do, we're gonna have to be in the virtual office hours a lot more now as we try to finish up and we hit items like this where you just can't memorize. So you all have a very pleasant, hopefully not too rainy, adjusting entry weekend, and we'll see you all on Monday and Tuesday.
You
Okay.
have a good weekend.
See you.